Good afternoon. This is Julie, J Auto Trading Strategies. The big event for today, other than the FOMC minutes, which we'll discuss in just a moment, was this nat gas sell-off. It sold off 6.4, almost 6.5%. Um, really a remarkable pullback overnight, and then a little bit of a rest going into the US session, and then it just continued its downward spiral to the second Fibonacci level. And this is after the breakout from this long sell off for a year, over a year sell off. So we finally had a breakout of that range, and now we're retracing back into it. This is my line in the sand, 2840. So I'd like to see price stay above that level and continue its climb. Or if it breaks it and gets back into the range, I'll be looking for a more of a failure. And I don't know what we'll do. We'll just stay away from it, I guess, but in the short term. But if we can get a bounce in gas, be looking back for longs. Um, on the flip side, crude rallied up today after the EIA report, and it really stayed inside of its bear bar from yesterday. And I think this is falling further into its range because the rally didn't get it past really its halfback, stayed inside of its value area. But here we got trapped in about a 60-cent range up and down several times. That was enough for my account to get eaten up. So it did right itself, went back to its value area, and that followed Tuesday's sell-off. So I do think that this is coming down though, and we should be approaching a little bit lower. But you can never tell with crude. Um, so let's talk about the big story with the markets. The Federal Open Market Committee met, and Miss Yellen's last day was today. So I think I have a picture of her if I can find it. Here it is. Let me pull that up for you. Here's Miss Yellen, her last day. I think she did a fabulous job, and I love her collars. She always pops her collars. I thought that was cute, so I pointed that out for you. So good job, Miss Yellen. But remember that this week we've had a little bit of a pullback on those long-term bond yields rising to their highest level in nearly 3 years. The Federal Reserve's warning us of higher interest rates to come, hinting inflation is right around the corner. But yet they are remaining accommodative at this point. They are not cutting off the juice. The QE juice still runs. They're still buying bonds. They're still buying mortgage-backed securities. They're still printing money, and they are still competing with China and Japan and Europe on that quest for the QE. So at one point, I think the U.S. will be the one that leads them out and normalizes the fact that is quicker than anybody else. And it looks like they're going to be normalizing by raising rates first. So instead of cutting the juice off, they're just going to start raising rates, which makes no sense to me. It seems like they would cut it off, keep rates low, and then raise rates, but I don't know. Anyway, so it's going to get um, a little bit bumpy. I think we will see some downswings coming up in the near future, given this indication that they are planning to raise interest rates at the next meeting. And also, don't forget, tomorrow is the ISM manufacturing report that comes out at 9 a.m. That is 70% correlated with the long bond. So that will give the tone for the month for the long bond. And I can tell you right now, just by looking at their projection of 58.8, anything over 50 is bearish for bonds, which would be bullish for stocks, on that correlation, So they're expecting more growth with this high, continued higher print for the manufacturing. So more bearish bonds starting tomorrow, and especially if we get like a 60 print again. But anything over 50 consistently, and that first of the month, reinforces that tone. So be looking for some downward move in your long bond. I'll pull up the UB. That's my favorite bond to trade. We came down, I see today, and hit some volatility levels and bounced on my lines in the sand, which is good to see that I'm not just drawing those for anything. But I would be looking for this to stop testing highs and start breaking lows. So, and again, that may give the stock market a little pop tomorrow to the upside on that ISM manufacturing that comes out at 9 o'clock. All right. So that's all I have for you. I hope you have a good trading session. And don't forget, non-farm payrolls are Friday. Thank you so much. I'll have a good week.